Welcome in traders. Today we're going to go over today's price action. We are currently looking at ES and the time frame we are using is the 2000 tick chart. Now, the only supportive indicator I use is the 21 EMA, and other than that, I solely rely on price action to look for high probability setups. Now, today we have the FOMC announcement at 2 p.m. So price usually is pretty volatile and I recommend not trading an hour before that is released. Now, starting off with the pre-market analysis, what I like to do is find the resistance and the support, which are these purple lines. Now, these play a huge factor during the trading session because we like to see the reaction we get from it. Now, at first, I was looking at this and I was looking at it as a big trading range, and I wanted to see if price was going to respect these. And later on, I'll show you what happened during this session. Now, as you can see, we had a spike down that resulted in a break and a new low. This support was established and we ended up having a push higher. And now we are focusing on this uptrend, right? Now, this was right near the open, and I always mention the importance of the EMA. And if you zoom out and you look, you can see that there is a small consolidation or a range in place. And that is because candles are overlapping and they are straight up in the middle of EMA. So when this happens, it's good to be a little bit more careful when looking for entries because you do want to add that buy low, sell high style, and you don't want to buy straight into a resistance or sell straight into a support. Now, this uptrend needs a new high. As you can see, we broke it, but according to price action rules, this uptrend needs a new extreme. So this was right at the open, and you can see here we have a higher low, right? But what's the issue you see? And I just mentioned this earlier, we are right at the resistance. So if I'm buying straight into a resistance, there is a good chance that price can fail there and it will become a losing trade. So this is a low probability trade here. And it was right at the open, and I like to wait at least 5 minutes. I like to wait for the volume and the volatility to reside before looking for high probability setups. But once again, this happened right at the open and we're buying right into this resistance. So I don't recommend buying it. And then we can look for a second entry long, but the issue is counting from this new high, we have a new high, first entry long, pullback, second entry long here. And I labeled it red because it is very low probability. And reason being is you can see candles are in the middle of EMA. It's overlapping. Price got rejected at this resistance. I was expecting price to, break through it strongly. But as you can see, we stalled and this wasn't a trade that I really liked. I wanted to see a distinct push out of this congestion to look for either a higher low. So as you can see here, we finally had the breakout and I was looking for a higher low somewhere here. We never got it and we ended up breaking and making a new high. We had one smaller additional push, but that doesn't really mean much, especially because there really isn't an alternative trend or channel we can find, right? So right now, after the break in a new high, this is an area of development. This is an area where you want price to form a little better before, going long or shorting blindly. Now, I was anticipating for price to reverse, right? We had a break, we had a new high. It's kind of some range like style, but we started going a bit sideways and I was waiting for the next market cycle. And slowly and surely, the market then had a strong leg down, right? As you can see, it's a distinctive push down out of all of this congestion. So now we can focus on looking for shorts. But of course, you have to let the bullish correction play out first. So over here, I was looking for a short setup and this was super clean. Counting from this new low, we have a new low, first entry short, pullback, second entry short. Now we can't take a short until we are below the EMA, and this uptrend still needs to make a new high, right? So we ended up pushing a little higher. This is enough as an attempt, right? Because we attempted to make a new high. So once I saw this, and this uptrend isn't really that strong, And we are focusing on the new low here. I was waiting for a strong push below EMA and for a lower high to form, right? So we finally got that here. We had a push below, a super nice lower high here, and I was looking to take a short and for a price to reach the bottom of this downtrend. Now, I did take this trade and it did go a bit sideways for a bit, but remember, when we're entering, our stop loss goes, this was the signal trade I entered, the signal candle, it goes a quarter above the entry. So I entered right around here, I did a limit order, and the stop loss goes a quarter above it. And although it did take a minute and it was going a bit sideways, I still stayed in it, especially because we were holding below the EMA. And as you can see, once price held, it went ahead and made a new low. And it never stopped me out. We never even got close to the stop loss. So this is why it's super important to put it a quarter above the entry bar. And then we finally had a break and a new low, right? So now we have to pause looking to go short, and we can, same thing as we did up here, we have to wait for the next market cycle. And a really important thing is these key levels, and this is why I mentioned them in the beginning of the video, because you can see once we touched it here, we ended up having a failed breakout and we reversed. Now, the same thing goes here, where once we touched it, we ended up reversing, right? So this is an area where you have to be more careful, especially if you're still looking to short, even though the downtrend did play out. But this is a good indicator that, okay, we had a break, new low for the downtrend. The bulls are now pushing higher and expecting price to go towards this resistance. We had a small uptrend. I was looking for a second entry long, but nothing formed here. And then this is when FOMC news was coming out, and you can see how strong this uptrend is. So now we are focusing on looking for longs. As you can see, this is a nice seamless leg. It's almost forming perfectly with the EMA, although we had some breaks below it, but looks great. So now we are looking for long opportunities, and we had a pretty significant spike down. This was after FOMC was released, and we have to wait for this downtrend to play out before looking to take longs. So this downtrend had a break, nice push up, new low. So now it's safe to look for long setups. We had a nice significant push higher, and now we're looking for a second entry long. So counting from this high, and let me just draw the small downtrend. We have a new high, first entry long, pullback, kind of like a hidden second entry long. And we're holding above EMA. Now, I personally didn't take this just because FOMC did just come out. Price was super volatile. As you can see, the bars are pretty big. So I kind of wanted everything to cool down before looking for a trade. If you did take it and you did do a limit order, you would have scalped it for easily 2.5 points, which is a decent scalp. I personally didn't take it. I wanted price to cool down with all this volatility before looking for a setup. And we ended up going sideways, which usually happens after FOMC announcement. You can definitely see some indecision before the next market move or next market cycle. So we started going a bit sideways here, but mind you, we still need this uptrend to get a new high. It was a very strong uptrend. It was about 60 points. We haven't retraced 60% of it. You know, you could just measure with the Fibonacci tool. And as you can see, we didn't even come close to retracing that 60 or 50%. So we are still anticipating for price to make a new high. Now, this is a setup that I personally took, and it's because if you zoom out, you can see, you know, a nice two-legged move, right? So the downtrend played out, and we had a nice push above EMA. You can see a nice bullish reclaim. Now, I usually don't take these kind of higher lows, especially after a strong bearish close, unless we have a bullish engulfment. And as you can see, this candle engulfed this one. Nice, strong, juicy green candle. So this was a trade that I actually entered. I liked it. I did do a bit of a deep limit order, especially that because this bar was big. I placed it around here. and this was a nice quick scalp. Because it was in the afternoon session, I went for about 4 points, which is more than enough. But usually I do have a bit of a higher target profit closer to the high of that trend. And like I said, especially because it was a bullish engulfment, I liked it. We closed nicely above the EMA with a strong green body. So this was my second trade of the day. And although we need a bigger or a new extreme for the big uptrend, you have to respect these shortened channels. And as you can see, we are starting to form a bit of a range. And a good indicator is when EMA is in the middle of the bars and we are fluctuating back and forth between the resistance and the support. So after we had a break in a new high, you can't just blindly take, long setups. You have to wait for the bearish correction to play out. I specifically like for a bounce off of the support and then a push above EMA with a higher low or a second entry long, whichever. But you don't want to trade the middle because, price isn't really having a direction. We have overlapping candles, so it's great for you to learn patience here, wait for it to break out, touch the support, have a failed breakout, and then you can look for a continuation. So we're going to ignore this mess. We finally had a break out of the support here, and this is what I'm talking about. You had a failed breakout, price broke the support, and what you initially want is you want to look for a higher low somewhere around here. But this was towards the close and the momentum was just super strong, and we just straight up broke out, made a new high for this uptrend, as you can see, and now the market is closing and it's too late. But pretty easy price action, nothing too complicated. Most of these structures played out. There was not a lot of fake outs today. um and I had these two trades. I waited around the FOMC announcement and a bit after until price action um corrected itself. And yeah, that was it for today. And if anyone is new here and they're a little confused on when I say second entries and higher lows, I do have a beginner's, you can call it a small course that I have on my YouTube channel. It's a playlist for beginners, just to break down the basics of my entry models, how I draw trend lines and whatnot. These are just daily market recaps that I do. So if you're a beginner, definitely check it out. And I'll see you guys in the next video. Take care.